Hello everyone, this is Thursday with Sean, and now you can see that we are right here in the dark in the woods, and because there's something I'm going to talk about, this stock I'm going to talk about today, right, has got to do with electricity. It's going to be a very shocking stock, and literally because they make electricity, and I'm right here in Perth, out in the woods, right, where we don't really have light. We have to really go and chop firewood. Okay, we do have lights. This is a light bulb, but we actually do natural things. And the stock I want to talk about today is ticker symbol ED, Consolidated Edison. Now you may or may not have heard of this stock before. It is one of the stocks in the dividends aristocrats, which is the stock that I'm talking about every Thursday. These are the stocks that have been giving dividends for the past 25 years and increasing every single year. These particular stocks has been giving increasing dividends for the past 44 years. Imagine that, for the past 40 over years. It may be older than some of you guys, okay, older than me, and they can continue to give dividends. And I want to share with you how this whole entire company got started out with. It is a merger and acquisition of 170 companies, and the history, right, is way back. It's one of the oldest company that was like ever listed. This company, right, the history really goes way back into like 1823. So how many years is that? If you can calculate, many years ago, in 1824, right, after this company was really created, it was initially called New York Gas Light. So imagine when they start to create this company, at that point in time there was no electricity. It was all gas and light. And you can see I'm all alone in the dark here. So if you're around, just say hi and where you're from, what you're doing right now. Okay, very interesting company. The longest company on New York Stock Exchange. Now about 60 years later, a lot of companies merged together. And what really happened? Because it is one of the biggest company that is deregulated now, because for most of the companies that's doing utilities, providing light, providing gas, the government will want to stick in it. It will be a public company. Hey, hi Ruth, hi Kaitlun. Hope that you guys have good proper electricity and heating over where you are right now, because sometimes it's the things that we take for granted. But imagine investing into a company, every single time the light turns on, the electricity is flowing, you are making money out of it. Hi Catherine, hi Faustina, correct? I hope I pronounce your name correctly. And it is all these things, right, that's around us, things that we do not really see, that is ongoing, that's making us money if we invest into this company called Consolidated Edison, or the ticker symbol is ED. Now, how did this ED come about? It's actually Edison, EDISON. And why is this Edison called Con Edison, right? It's a consolidation of a lot of companies. And how did this Edison name come about? Very interesting. If you know of this guy who created light bulb, can you please type in the chat box who is the one who first created light bulb? Okay, this is not a light bulb. The light bulb is, okay, this is a light bulb. Okay, so the first guy who created light bulb, or famous for being the one to know, right, is actually this guy called Thomas Edison. He created this light bulb, and what happened is things began to change along the way, because last time we always use gas, we always use, firewoods to create energy, but now electricity actually created. Yes, Edison is the man, thanks Chi Hua. So I want to share with you, very interesting, the point in time, right, when this company called New York Gaslight, right, they have this company offering gas services, and there were 6 big companies in New York doing that. There was literally a battle for customers. They go out to the streets, they start to fight each other and say that, hey, this is my customer, use my gas, use my lights. And it's totally deregulated. The government don't really go and bother who is who. They just go out there and snatch. It is good in a sense, because when it's deregulated, right, we can have better services. They snatch customers by saying, I'm going to give you a lower price, I'm going to give you a better services. Now what happened is, right, this man came along called Thomas Edison, and which year was that? Now I got this. In 1879, Thomas Edison, he showed his light bulb. Pam! Things began to change, because this literally changed the whole entire industry. And the very interesting thing is this: the war continues. I'm not sure whether you guys know about this. Do you know that for Thomas Edison, right, is he using AC or DC? I don't know whether you remember learning all this when you were in science class. There's called direct current or alternate. Sorry, pardon my pronunciation. Or alternate current. So AC or DC. This is the kind of electricity, right? Make a guess which one is the one that Thomas Edison is using. Now I got all the information right here. It is very interesting. There was actually a war for this, because there was actually this thing called the war of the currents. They were actually fighting, saying that, hey, we should use DC, which is direct current, based on the Edison Electric Light Company. And another company called the Westinghouse Electric Company saying, no, we should use AC. And why is this war so interesting, right? This is the war that created this thing called the electric chair. Okay, electric chair. So what happened is this, because the Edison company says that, hey, using AC is too dangerous. And people who use AC, you put your lamppost with AC, you put things with AC around, right? I do not know why is it so dangerous, okay? If you're a science student, probably you know this better than me. But what happened is they actually published a warning letter to the public, say that if you use AC, it's going to be very dangerous, people may die. And eventually, right, something really happened, because what happened is there was this engineer who was working, who was a bit drunk. He was actually working near there. It was like 6,000 volts pumped. He got electrocuted. Let me give you some sound effects. I actually prepared some sound effects for you guys. Okay. Is that sound effect? Sorry. Okay, this is the electric sound, right? And subsequently, this guy actually got burnt. And very interesting, right? What happened is they said, okay, let's stop all this fight. Let's consolidate all the companies and really become one company itself, so that there's no more fighting. Because there's so much people who needs electricity, there's ongoing things, let's continue to fight. So Tesla was supporting to AC, okay? So it's the Tesla car safe. Hopefully it is, okay? And what happened is this, I just want to share with you, this company caught my attention because it is one of the dividends aristocrats. Very quiet company. It's a utility company. If you go to Morningstar, you search for the news of these companies, right? There's hardly any news on this company. So I'm going to go to Morningstar right now, one of my favorite websites for doing stock analysis. We can look at the 10 years financials. We can look at the valuation right now. And I can share with you that this company itself, I can't find much news because there isn't much exciting news. Very boring company, which is good. Means that very little people died after using their electricity. Because now the scientist Tesla, not the Tesla car. Okay, cool. I didn't know about all this. So Maddie, you can share with us which electricity we should use, and I'll share with you which stocks we can actually invest in, which is something that very important. If you're in this industry, you will know some things better than the rest. Okay, so this is the company, Consolidated Edison, ticker symbol ED. What is so interesting about this company? Let me show you something that's amazing. Their key ratios in the midst of all this turmoil, their revenue, their earnings per share, their dividends has been increasing for the past 44 years. So if you look at the earnings per share, okay, you can do your own homework, but I just read out to you some of the very interesting numbers. It is actually flat. Throughout the past 10 years, it is flat. Very stable, not much movements. The dividends keep increasing. From 2008, it was $2.34. Meaning to say, you buy one stock, it gives you $2.34. Until today, it's $2.79. Every single year, it creeps up a bit by a bit. Now, if you remember, I talked about this thing called payout ratio. Meaning to say, how much money they are making, how many percent of the earnings that they are making, they are giving out as dividends. The payout ratio ranges from 69, or rather, it is right now 55%. Meaning to say, if they make $100, they are giving you $55 as dividends. Very, very safe. Enough cash flow, enough really reserves for them to continue their services. And do you think people will continue to use electricity? Now, you may or may not think so. Say, hey, there's competition for electricity, correct? Let me show some important elements of this company. How do they make money? Let me just show you. I prepared some slides as well. So the first portion is regulated utilities. Okay, we talk about them being deregulated, correct? Regulated utilities is basically electricity, things that goes into your house. This takes up about 70 to 80% of their whole entire profits, earnings per share contribution. The other about 20 over percent, the second biggest one is 20 over percent, which is clean energy. When I read their annual reports, right, they are investing a lot of effort on clean energy. When I read this, I personally feel quite good about this company. So because they are really thinking about how to use alternate kind of fuels to really help us have all these lightings and all these things, and do not really destroy the environment. I really like this effort a lot. And if I read the whole entire presentation, a huge bulk, about 50% of their presentation talks about clean energy. So if you like clean energy, this is one company you can look at. And the last portion, right, only about 3% is about transmission, how they pipe electricity from the whole entire power generator to your house. Very interesting because their power generator also belongs to them. And this is their dividend payout and earnings per share. You can see beautiful, going straight up, slowly creeping up for 44 years. There's dividends increase. So I want to share a few more interesting facts about them. They have 7,000 miles of pipes. Okay, what does it mean now? What it means is this. Their underground cable, right, is enough to wrap around the earth 3.6 times, which is 93,000 miles, okay? So this is how big they are. They are one of the biggest, again, deregulated company in the whole entire world, providing electricity. So that's why I say this is a shocking company because of electricity, one of the very good kind of companies to invest in. Now, finally, the valuation. Valuation-wise, I would say that it's not exactly the cheapest right now, even though that utilities companies have been going down. Right? This company is not really shaken in that sense. So when I take a look at the valuation, okay, let me take a look at this. The P ratio currently is 14.37. It is actually, on average, it is always about 18, 17. It's slightly below average in terms of P ratio. The price to book is about 1.44. The average is about 1.5. So you can see it's slightly undervalued compared to its relative value. Now, the most important for this company, we look at dividend yield. Why? Because it's a dividend aristocrat. It's paying out very stable dividend. The dividend yield right now is only 3.88. Okay, when I look at the whole entire historical dividend yield, right, in 2008, during the financial crisis, it goes as high as 6%. Okay, so if you are not catching me right now, what it means is this. For every $1 you are paying for this stock, if the stock price is $1, how much dividends are you getting back? This is called dividend yield. The higher, the better. Yes, we calculate the entry price using dividend yield. This is how I will calculate for this particular company. And I'll share with you what dividend yield am I actually going for. If you can look at the whole entire dividend yield history, which is right here. Okay, am I pointing correctly? The dividend yield was as high as 6%, meaning you say the price goes so low and they give enough dividends for you to get at least 6% based on the amount of money you get. And you can see the stock price continue to increase because they continue to give more and more dividends every single year. Again, for 44 years already, you know. So my personal entry price, right, I'll be waiting for it to hit 5% dividend yield before I enter to go inside this company. If it hits about 4%, I'll just buy slightly a bit, just to remind myself that this company exists. Because sometimes the company is expensive, the stock price is high, you don't buy it, you totally forget about it, correct? So I'll just buy it when it hits about 4%, and when it goes below 5%, I'll buy quite a bit of it because this is a very stable company. So do you have any questions about this company? Any questions about dividends aristocrats? Very interesting company. You can take a look about this. Most people probably who not have seen this company before. Very, very quiet company. It is just behind the scene providing electricity. Okay, so this is one of the stocks that I want to talk about. I hope that this Thursday you are getting a lot of stocks insights, and more importantly, look at how investors look at an investment. Look at how they are providing products and services, who is paying them, is this going to be sustainable, and what kind of track records they have. This is what I like to look at. Personally, I use the GST method. G, how do they generate income? 2, is it sustainable? And 3, track record. Okay, Pete asks where to find other dividend aristocrats. Let me share with you a secret website. It's called google.com. Type dividend aristocrats. And okay, they have this S&P 500 dividends aristocrats where there's 53 stocks there. Let me give you these specific websites. Okay, I can't really remember the website name. So dividends aristocrats, you can go to simplysavedividends.com. okay, simplysavedividends.com. There's a whole entire list of dividends aristocrats. Again, stocks that have raised their dividends for the past 25 years. If they do not raise their dividends, they're out of it. Actually, there's more than this. There are 53 stocks, but there's more than these 53 stocks. These particular 53 stocks are those found in the S&P 500. So there's even more of that. Sometimes you can use screeners, and in fact, this is only in US. You can find other stocks in other parts of the world. So I hope that you have learned something. Thanks, Maddie, for actually commenting on this great presentation. I was also quite intrigued when I found this company. I hope that you guys actually enjoy yourself and also continue the comments coming in. And remember, not just to listen, but to take action and actually invest. So have a wonderful evening. I'll see you guys next week. Bye.